Have you ever asked yourself, what if wealth isn't about luck or privilege, but belief? In You Deserve to Be Rich, Rashad Bilal and Troy Millings break down generational wealth, mindset shifts, and practical game plans to help you build real, lasting money. This Insibook summary cuts through the noise and shows you how to stop surviving and start scaling. Let's get into it. You deserve to be rich. Let that sink in. It's more than a catchy phrase. It's the fundamental truth that unlocks the potential for profound financial transformation. Many of us grew up absorbing subtle, and sometimes not so subtle messages that painted wealth as something elusive, perhaps even morally questionable, reserved only for a privileged few. We might have heard that money is the root of all evil, that the rich are greedy, or simply that our circumstances, our background, our education, our starting point, dictate our financial destiny. These deeply ingrained beliefs, often inherited unconsciously, act as invisible barriers, creating a scarcity mindset that whispers limitations in our ear. This scarcity perspective breeds fear of taking risks, fear of investing, fear of failure, even fear of success, and the responsibility it might entail. It conditions us to play small, to stay within the confines of what feels safe, which is often just another word for stagnant. This journey begins with a conscious, deliberate dismantling of those limiting narratives. It requires you to actively challenge the ingrained assumptions about money and your own worthiness. The first, most critical step is internal, cultivating an unwavering belief in your right to financial abundance. This isn't about arrogance or entitlement. It's about recognizing your inherent value, your capacity to create, contribute, and ultimately, to receive the rewards that align with that value. Think back to the financial conversations, or lack thereof, in your formative years. What messages did you receive about wealth? Were they empowering, or did they instill a sense of lack? Often, we internalize a worldview where resources are finite, where one person's gain must logically be another's loss. This zero-sum thinking paralyzes us, preventing us from seeking opportunities that could elevate our financial standing. Shifting this requires a profound act of self-permission, giving yourself the green light to pursue a life free from financial anxiety, a life rich with possibilities, security, and the freedom that genuine wealth affords. This belief isn't a passive wish, it's the active, energetic foundation upon which all tangible financial actions must be built. It's the internal switch that allows you to see opportunities where others see obstacles, to pursue goals with conviction, and to expect positive financial outcomes as your natural due. Once you start to internalize this fundamental belief in your deservingness, the next vital step is to broaden your definition of wealth itself. Too often, we confine wealth to a mere numerical target, a specific dollar amount in a bank account. While financial metrics are important, this narrow view misses the true essence of what it means to be rich. True wealth is multidimensional. Primarily, it represents freedom. Consider the freedom to design your own schedule, to wake up and choose how you invest your time rather than being dictated by the demands of a traditional job. Think about the freedom to travel, to spend more time with loved ones, to pursue hobbies or causes that ignite your passion without financial constraints holding you back. It's the freedom from constant worry about bills, unexpected expenses, or the future stability of your income. Wealth also provides security, a buffer against life's inevitable uncertainties, ensuring you and your family are protected during difficult times. Furthermore, wealth equates to opportunity, not just the opportunities it opens for you personally, but the capacity it grants you to create opportunities for others, whether through employment, investment, or philanthropy. We must actively shift our focus from merely earning a living, a phrase that implies mere survival, to building a life of abundance and choice. This shift hinges on understanding the critical distinction between trading time for money and cultivating assets that generate income independently. Your job, while necessary for many, typically operates on a time for money exchange. Your income is directly proportional to the hours you work and the salary you command. Wealth, conversely, is built through ownership, owning assets that appreciate in value or generate passive income streams, irrespective of your direct, moment-to-moment involvement. Owning a successful business that operates efficiently with or without your constant presence, holding investment properties that generate rental income, investing in stocks that provide dividends or capital gains. These are the true engines of wealth creation. They establish systems where money works for you, multiplying your resources while you focus on higher-level strategies, personal growth, or simply enjoying life. The goal is to transition from being solely an employee or a consumer to becoming an owner, a creator, and an investor. This requires a strategic reorientation of your financial efforts, moving capital from active labor towards the acquisition and development of income-generating assets. Before embarking on the creation of multiple income streams and the acquisition of assets, establishing a robust financial foundation is absolutely paramount. This phase demands a level of unflinching honesty and disciplined action that might initially feel challenging, but it forms the bedrock of sustainable wealth building. You need to confront your current financial reality directly, without judgment, but with absolute clarity. This involves meticulous tracking of every dollar that flows in and out of your life. Where is your money actually going? Uncovering your spending patterns is the essential first step toward gaining control and identifying areas for optimization. Based on this hard-won awareness, you construct a budget. Importantly, this isn't about severe restriction or deprivation. Rather, it's about creating a deliberate plan, a financial roadmap that aligns your spending with your aspirations. A well-crafted budget empowers you by intentionally directing funds towards savings, investments, debt repayment, and essential living expenses, ensuring your money serves your long-term goals rather than evaporating unnoticed. Simultaneously, aggressively tackling debt, particularly high-interest debt, such as credit card balances, personal loans, or payday loans, becomes a critical priority. This kind of debt acts like a heavy anchor, constantly impeding your financial progress and draining your resources. Eliminating it frees up significant portions of your future income and removes the drag that prevents wealth accumulation. Equally vital is the cultivation and protection of your credit score. View your credit score as your financial reputation, a powerful indicator of your reliability and trustworthiness in the eyes of lenders and financial institutions. A strong credit score is a key that unlocks better financial opportunities, significantly lower interest rates on mortgages, car loans, and investment financing, potentially better terms on insurance, and often advantages in securing rental housing or even certain employment positions. It demonstrates fiscal responsibility. Consistent saving also needs to be elevated from an optional habit to a non-negotiable practice. This involves deliberately setting aside a portion of your income with specific future objectives in mind, building an emergency fund, accumulating a down payment for property, or generating capital for investment opportunities. The emergency fund, specifically, is crucial. It serves as a shock absorber for unexpected events like job loss or medical emergencies, preventing you from having to derail your long-term investment plans or go into debt when life happens. This foundational phase is about instilling discipline, gaining financial awareness, and taking decisive command of your present situation. It's akin to laying deep, solid concrete foundations before constructing a skyscraper. Without this stability, any structure built upon it is inherently vulnerable. With a firm financial foundation established, debts managed, savings initiated, and a clear budget in place, the focus powerfully shifts towards the active generation of income and the strategic acquisition of assets. This is the heart of wealth creation. The principle of diversifying income streams is absolutely central to this phase. Relying solely on a single source of income, typically a traditional job, creates inherent financial vulnerability. If that primary income source is disrupted through layoffs, illness, or economic downturns, your entire financial structure can collapse. Building true wealth requires creating multiple independent avenues for cash flow. This diversification can take many forms. Perhaps you identify a skill or a passion you possess and leverage it to start a side business or offer freelance services. Many successful entrepreneurs begin this way, testing the market and building a client base outside their regular working hours. Creating digital products, online courses, ebooks, software, allows you to leverage your knowledge or creativity to generate income that isn't directly tied to the hours you actively work. Consulting in your area of expertise offers another avenue. Entrepreneurship itself is a major pathway explored here. It doesn't necessarily mean launching a large corporation from the outset. Often, the most successful ventures start small, identifying an unmet need in the market, developing a solution, and then meticulously scaling the operation. This requires learning fundamental business principles: how to market effectively, deliver exceptional customer service, manage finances, and eventually build systems that allow the business to thrive and generate revenue even when you're not actively involved in every single task. Alongside, or perhaps as part of, entrepreneurial efforts, investing becomes the indispensable engine for accelerating wealth growth. It's crucial to reframe your perspective on the stock market, viewing it not as a casino for speculation, but as a powerful mechanism for owning stakes in profitable businesses. Understanding the magic of compound interest, where your earnings begin generating their own earnings, creating exponential growth over time, is fundamental. This concept illustrates how consistent, disciplined investment, even starting with relatively small amounts, can snowball into substantial wealth over the long term. Learning about various investment vehicles is key. Understanding the diversification benefits of index funds and ETFs, exchange-traded funds, the potential growth of individual stocks, the relative stability of bonds, and the managed approach of mutual funds allows for informed decision-making tailored to your risk tolerance and goals. Patience is a critical virtue here. Chasing rapid, short-term gains often leads to significant losses, whereas a strategic, long-term investment approach harnesses the power of time and compounding. Real estate is frequently highlighted as another potent wealth-building tool. Owning property can provide consistent passive income through rent collection, generate capital appreciation as the property value increases over time, and offer significant tax advantages. Exploring strategies such as purchasing rental properties, utilizing house hacking, living in one unit of a multi-unit property while renting out the others, or investing in real estate investment trusts, REITs, can open up substantial avenues for building equity and generating cash flow. The overarching principle guiding this entire phase is diversification. Spreading your financial resources across various income streams, active business income, freelance income, royalties, and diverse asset classes, stocks, bonds, real estate, potentially alternative investments, mitigates risk and maximizes opportunities for growth. It's a fundamental transition from being primarily a consumer reliant on a single paycheck to becoming an active owner, creator, and investor within the economic landscape. However, the path to wealth is seldom a smooth upward trajectory. Obstacles, both internal and external, are not just possible, they are virtually guaranteed. Preparing yourself mentally and strategically to confront these challenges is essential for sustained progress. Fear often surfaces in various forms: the fear of making a poor investment decision, the fear of business failure, the fear of success, and the potential disruption it might bring to your current life, or simply the fear of the unknown. Recognizing these fears, exploring their origins, and developing coping mechanisms and strategies to manage them is crucial. You might also encounter setbacks. A business venture might not achieve the expected traction, an investment might underperform, or unforeseen circumstances could lead to unexpected expenses. The critical response isn't to be paralyzed by these events, but to view them as invaluable learning opportunities. Analyze what happened, identify the contributing factors, extract the lessons learned, adjust your approach, and move forward with renewed resilience and determination. It's also important to acknowledge that societal conditioning and systemic barriers can present additional hurdles, particularly for individuals from historically marginalized communities. Recognizing these realities is important, but the emphasis must always remain on personal agency, proactive problem-solving, and developing the resilience needed to navigate and overcome these challenges. How do you respond to skepticism or doubt from friends or family members who may not understand or support your financial ambitions? How do you maintain focus and discipline when progress feels slow or when your efforts aren't immediately visible or validated by external success? Building a robust support system becomes invaluable. Surrounding yourself with like-minded individuals pursuing similar goals, finding mentors who have already navigated the path successfully, or establishing accountability partnerships can provide encouragement, guidance, and crucial motivation. Continuous learning is another non-negotiable element. The financial world, market trends, and investment strategies are constantly evolving. Staying informed through reading, Attending seminars, listening to podcasts, and engaging with financial education resources keeps your knowledge current and your strategies effective. Cultivating mental toughness, the ability to stay focused, disciplined, and optimistic despite difficulties, is paramount. Resilience isn't about avoiding failure. It's about the capacity to bounce back quickly and effectively when faced with adversity. Think of this process like climbing a formidable mountain. There will be steep inclines that test your endurance, moments where you feel exhausted, perhaps unexpected storms that obscure the path. But with thorough preparation, unwavering perseverance, and a clear focus on the summit, your financial goals, the climb is achievable. Furthermore, we must confront the concept of generational curses. The negative financial patterns, beliefs, attitudes, or even cycles of hardship that can be passed down through families across generations. Identifying these inherited patterns is the crucial first step toward breaking them. You possess the unique power to be the generation that transforms your family's financial legacy, consciously replacing cycles of scarcity and limitation with cycles of abundance, opportunity, and enduring prosperity. As your income streams diversify and your asset base begins to grow steadily, the strategic focus naturally expands towards scaling your wealth and considering your long-term legacy. Scaling isn't merely about accumulating larger sums of money, it's about increasing your capacity and efficiency in generating wealth and impact. This might involve optimizing your existing businesses by implementing better systems, refining your investment strategies based on performance data, forming strategic partnerships that leverage mutual strengths, or bringing on skilled employees or contractors to manage specific functions. Delegating effectively becomes a critical skill. Entrusting qualified individuals with tasks frees up your time and mental energy to concentrate on higher-level vision, strategy, and growth opportunities. It's about building robust, efficient structures within your ventures that enable greater reach and profitability. This stage requires astute strategic planning, a forward-thinking mindset, and often the discipline to reinvest profits strategically back into the ventures that are generating them, fueling further growth. But the concept of wealth building extends far beyond personal accumulation. The idea of legacy invites you to think beyond your immediate financial needs and desires. What kind of lasting impact do you want your accumulated resources and efforts to have? This could manifest as establishing profound financial security and creating educational opportunities for future generations within your family, ensuring they are equipped with the knowledge and resources to avoid the struggles you may have encountered. It could involve making significant investments in your local community, supporting small businesses, creating valuable employment opportunities, or funding initiatives that address pressing social or environmental needs. It might mean building businesses that are not only profitable, but also operate with exceptional ethical standards, provide a positive and empowering work environment for employees, and deliver genuine value to customers. True richness, in this expansive sense, transcends the mere balance in your bank account. It involves creating a positive ripple effect that benefits others, uplifts communities, and contributes meaningfully to the world. It's about constructing something enduring, something that reflects your core values and continues to provide benefit and create opportunity long after you are no longer actively involved. The ultimate aspiration, therefore, is not simply to possess wealth in a material sense, but to live richly, a life characterized by financial freedom, deep purpose, meaningful contribution, generosity, and a lasting, positive legacy. Ultimately, the journey circles back to the foundational truth. You deserve to be rich. This realization is not a passive hope or a distant dream. It is an active pursuit, rooted in a fundamental internal shift and sustained by consistent, strategic action. It calls upon you to consciously reprogram your mindset, shedding the limitations imposed by a scarcity mentality and embracing the expansive possibilities that abundance offers. It requires you to redefine wealth holistically, recognizing its dimensions of freedom, security, opportunity, and impact, extending far beyond simple monetary value. It necessitates the diligent construction of a solid financial foundation through unwavering discipline, intentional budgeting, strategic debt elimination, and proactive credit management. It involves the creation of multiple diversified income streams and the strategic acquisition of income-producing assets through focused entrepreneurship and informed investing. Crucially, it demands the cultivation of resilience, the ability to learn from inevitable setbacks, and the perseverance to navigate challenges with unwavering resolve. As your financial capacity grows, the focus evolves towards scaling your efforts effectively and thoughtfully, crafting a legacy that extends your positive influence beyond your own lifetime. This is an ongoing, dynamic process of continuous learning, adaptation, and unwavering commitment to your financial well-being, growth, and the abundant life you are inherently worthy of living. The power to fundamentally transform your financial reality resides within you, waiting to be unlocked through belief and action.